This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk here on this Wednesday, June 29th. Great to have you with us once again. Thanks for making us part of your day. I'm your host, Jesse Allen. You can find us online, markettalkag.com. That is our home on the web, markettalkag.com. That is where you can find us, all of our social media links, streaming sources, and much more. It's online, markettalkag.com. Well, taking a look at Wednesday's trade action, we saw a fairly mixed trade with soybeans, again, showing some strength. Quarter wheat was a little bit more mixed, though. All of this ahead of Thursday's USDA reports. We have plenty to discuss. Let's say good afternoon to our good friend Mike Zuzolo with Global Commodity Analytics joining us today. And Mike, good afternoon to you, sir. And you know, it was a fairly choppy, quiet day ahead of tomorrow, which more than likely will provide us with some fireworks.
Yeah, you've seen the corn really diverge from the soybeans here this week, and I think that goes back to those reports coming out tomorrow, Jesse. I think the trade's just got a little bit more of an underpinning supportive mindset when it comes to the soybeans because of the export demand we've seen here in the beans versus the corn. And so the path of least resistance ahead of the acreage and especially ahead of the stocks report is that, you know, USDA's or the trade pre-estimates for the June 1 stock seems high compared to last June. Beans they're looking at a bean number of, I want to say, it's looking at plus 196 million bushels on soybeans. That seems high given the fact that we've got such demand. I think that's really underpinned the beans. The other thing that's really underpinned the beans has been both products have supported, not just the bean oil, which has been back and forth this week, but the crude oil's really helped it here lately. But the meal has just not wanted to look back after finding that low below that 425 level and really wanting to kick into higher gear. It'll be really interesting to see how the meal especially acts during delivery.
Very, very true. Well, we got first notice day coming up tomorrow as well for those July contracts, and there's a lot of talk out there about a lack of open interest right now, and I think we should discuss that a little bit. And I'm going to pull up some of your charts as well too while we're talking, Mike. But I found that very interesting that there's some talk about that open interest is really, really tightened up here to levels we haven't seen in quite some time.
Yeah, I was really glad you reached out to me before our show today because I had not caught that lower futures open interest. And so when I looked at Monday and Tuesday's numbers, I saw a really interesting feature to this market that helps, I think, solidify what we were already going to talk about and what I'd sent to clients and subscribers last night about the market at a really big inflection point, both fundamentally and technically. And it really does revolve around this crop weather, that the crop progress numbers really showed us. I mean, they really showed us the shortness and the vulnerability of the crop, especially in states like Kentucky, Indiana, Ohio, and Tennessee, and even Illinois to a lesser degree in the southern half of the state. So we're looking right now at a Bloomberg Grain Commodity Index monthly chart. And, you know, you can't always rely upon cycles or seasonals, but when it comes to big picture stuff, I still like to use them, especially in relation to super cycles and things like that. And what this grain index from Bloomberg Commodities research shows, and this is a tradable, exchange traded fund in terms of an index you can get in and out of with a pretty sizable amount of bushels and amount of dollars underneath it. But going all the way back to 2002, there's a pretty strong cycle that's about 4.5 years from low to low. And so we're really starting to cyclically move into the later stages of a run up because we're running into the 2+ year category. And we see this last month, this current month we're in right now, we've taken out 3 months worth of lows with this break we saw late last week and early this week. And really there's very little support until you get back down to that red trend line, which is right around 45. that 45 also matches up with the 2021 highs. So you take 45 into 50, and you're talking about still a potential for another 10% break to the downside. So technicals are starting to really show a more negative mindset. And I think this goes back to the inflation bull that's running away from the market, the demand bull running away from the market, Jesse. And that's where that open interest, we've seen futures drop substantially in corn, in beans, and in soft red wheat. But we've seen the options jump in all three. And when I looked at Monday and Tuesday's data, I was really surprised to see, like, for instance, soybeans on Tuesday, the futures open interest was down about 13,000 contracts. The options open interest was up about 10,500 contracts. Same thing with the wheat. It's been down pretty sharply both Monday and Tuesday this week. Soft red wheat on Tuesday, open interest was down 98.62 in terms of futures, but the options, it was up 9,911 contracts. Big change in the mindset of the trade, real shift in the parameters of risk, and really wanting to transfer that risk because they have less certainty and a lot less confidence at this point.
Well, I want to talk as well a little bit more kind of on this topic on the corn side, Mike. And I know you sent me over a corn inversion chart as well. And we saw some of that spread activity continue here today with that July contract nearing first notice day. And just talking about the spread and some of the inversion we're seeing. Walk us through a little bit more what you're seeing with corn right now.
Yeah, this is where corn and beans are both pretty amazing. They look a lot like 2011, 2012, 2013, and even late last year or mid-year last year when we were really tight on old crop supplies. And you notice, Jesse, that we've kept on this same type of mindset in our conversations in recent weeks. Is the cash market has not backed down in corn and beans, and therefore the front end futures have not. So we've gotten $1 plus over in lead month corn July minus the September. So there's a terrific discount in the September. So I think one of two things is going to have to happen between the crop reports tomorrow, the weather over the weekend, and then the delivery process that starts, as well as you say, tomorrow at this stage of the game. I think you got to have either the July corn and the July beans break to the September corn and the August and the beans, or vice versa. The September corn and the August beans run up to and help meet up with the July because the cash market's so tight. And I think that goes back to that original chart we just showed you. That goes back to the open interest numbers that we just talked about. I think these spreads are really telling you the market is not very sure about new crop at all, but they see how tight the old crop supplies are, the spreads, and the basis. I think it was earlier this week, Decatur, Illinois hit 70 over the July in terms of basis, and they have tapped that back to, I think, 55 over as of the time we go on the air. But that really shows you the corn is very short out in the middle of the country where the yields were very, very good, record yields in that area of central Illinois last year from many of my clients. So this spread you're looking at right now, I think is going to be one of the most critical spreads and one of the most critical features to not just how we close out this week, but when we come back from the 4th of July holiday. So corn stocks, the first number there, soybean stocks, wheat stocks, first numbers are the estimates, the average trade guess from Reuters. We've got the June 21 numbers right below that, and you can see we're looking at a build in both corn and beans. Again, the bean number seems a little high. I would think that we probably would be more closely associated with maybe a 900 million bushel carryover and not almost 190 some million bushels over last year.
And I think as well, one way or another, Thursday's reports could at least maybe be the start of getting, some of those contracts July in line with September and then with August beans, et cetera, one way or the other, whether it's going up to it or coming down to it, depending on how the computer algorithms read those reports tomorrow, that could at least maybe be the matchstick to start the move one way or the other, Mike.
Yeah, and I'll throw on top of that, I think that's an excellent point. I'll throw on top of that the kind of the cherry and the whip topping on this Sunday, because we're talking about July 4th, and I just think food on July 4th. So what I'm seeing right now, Jesse, is that reports may mean absolutely or next to nothing to the trade. And after we go through the algo gyrations, when those spot numbers hit the news wires, if that weather looks dry going into this weekend, I'm hearing from Kentucky, Tennessee, Illinois, Indiana, Ohio clients and subscribers that they're really going to see a cut in their potential yield. And these are clients that have had a pretty decent crop stand so far. So I think this really is the national yield making weekend for the corn and bean crops, partly because of the rain and it not falling, but also because the models really heat up after this rain goes through. We're looking here in Atchison at 99 degrees when it comes to Tuesday, Wednesday of next week. And so if those models follow through and we don't get the rains we're supposed to, and we're 99 next week, even we are going to start to trim some supply off and production off because we're going into pollination at that point. So this is the make or break for the 22 corn and beans. I think those charts that we looked at and those open interest numbers that we're talking about, that makes sense why the trade's doing what they're doing. I'd rather buy puts right now than sell cash bushels, even if you got the most beautiful crop in the world, because the whole nation may go down as of next week. And those crop conditions Monday showed us that when Kentucky lost 24 points.
Mike, as well, you mentioned cash a little bit ago. I want to look at one more chart you sent today, and this is kind of a cash corn spread with hard red wheat, I believe, in Hutchinson, Kansas. So talk about this a little bit and maybe talk a little bit more about some of that strong cash that we've been seeing across the countryside.
Yeah, this is one of my favorite charts because Hutchinson's right in the middle of feedlot country, and feedlot country means what are you going to feed? And so when you see hard red wheat at harvest time, 95 cents under the corn price, that's where that spread shows up. It's not that Hutchinson has great wheat yields. I think from what I'm hearing, they're slightly below the 5-year average to terrible. It depends on who got the rains and who got the hail. But my point being is if you're 95 under in cash wheat minus the corn, you're going to start feeding those cattle hard red wheat. And so wheat still is very much a player in this corn market. And it's shown us that. It's shown us that from this respect in terms of losing a lot of premium. Look at where that was just 3 weeks ago, Jesse. It was 10, 15 cents over the cash corn price. So we don't want this to last very long because either we're in a 2012 scenario where the corn is drying up and dying, like we just talked about, but we really want the wheat to play ball with us for a longer lasting corn potential rally. So that's where the market's really trying to make up its mind. Are we still in a 2008 mindset, or are we going towards a 2012 where it's going to be corn and beans that have a train wreck in terms of production? So this is one of my very favorite charts. I think the other thing that really this shows is the hard red wheat in terms of the cash and the futures acting much differently than the cash versus the futures in the corn. Why is that? I think because the dollar strength, the copper weakness, the emerging markets in China have really never come back online in terms of investor enthusiasm. And that's a big deal. Going back to my point just a minute ago, you want investors participating in the wheat because then they think better about emerging markets, and it's kind of a rising tide lifts all boats.
Well, let's segue from that conversation into cattle here. I think that's a good spot to move us into livestock. Cattle trade today, fairly quiet, a little bit lower. Feedlot country is just kind of stubborn, it feels like, this week. Not a lot of activity, at least in the north anyway. Heading into the 4th of July holiday, what's your thoughts with this cattle market right now, Mike?
Well, USDA and some of the commentary out of Chicago are starting to make me feel like my expectations of closer to a 140 cash trade, 139, 140, is getting the business done. We may not be able to see it very well, but the negotiated cash prices are very strong. We did 145 earlier this week on negotiated cash basis on USDA's numbers. And I think between that and the heart of the summer grilling season, and I'll add to it something we've talked about before, Jesse, I look at corn and cattle very similarly when it comes to weather because our supplies, our dressed weights are dropping every week now. And we're now, I think, 5 pounds below year ago levels. So if we have 100-degree temperatures in Atchison, you can bet we're almost going to be triple digit plus actual temperatures in Hutchinson because we're right on the Missouri River. Those guys down there, they're right in the middle of the plains. They get the Texas heat, and that's going to mean less feeding. It's going to mean move those cattle in the market quicker on lighter weights. And so I think there could be a weather market develop again in the fat cattle, not as geared up on the feeders. I think we still got a supply of feeders that probably need to move through the network a little bit longer, maybe another 30 days. But fat cattle to me, if the cash market is at 140-ish, in June futures is at 136, and August is getting ready to take over his lead month at 133. You're looking at a bigger and bigger discount in the futures minus the cash. So I'd really be eager to see if the cash market doesn't help support the August fat cattle when it becomes lead month futures. I'd be, I guess what I'm saying, sluggish on my marketings right now for fat cattle, especially with the heat coming on.
Now, on the flip side, hogs, I know we're going to look at the quarterly hogs and pig numbers here a little bit later on, get those digested, and, that'll factor into Thursday's trade action. But looking at the hog market, really all week, it's been fairly nervous ahead of those quarterly hogs and pigs numbers, it feels like. And you mentioned China as well, and we're maybe hearing some slow improvement in hog feeding margins there, maybe a little bit of optimism for a return of, feed demand for China. But, looking at hogs and pork exports as well, wondering if we'll see some more of that activity pick up. And the same story as well, Mike, with hogs and grilling season and pork. I wonder your thoughts on this hog market, not knowing what our quarterly hogs and pigs numbers are quite yet.
Well, yeah, I mean, I did beef on Memorial Day, and I'm doing pork carnitas on July 4th, Jesse, and that's directly related to the price. I just could not tolerate another sirloin steak. Even after marinating it for 6.5 hours, I probably should have gone 24. But at this stage of the game, we're running $12.99 a pound in most of the local grocery stores for a decent steak that's choice. So I went towards the pork. I went towards a really high cut of pork, and it was half the price. And so I think between that and what you're talking about, the Chinese market-ready hog supplies seemingly dropping because those futures over in China jumped about 5% in one overnight trade. Either that was a big hit of volume or there's something going on there. But we took notice. But as you say, we've just kind of been treading water, even with the bean rally. I think it really does go back to the Hogs and Pigs report that we're going to get here later before we've hit the airwaves here. I think the breeding inventory number is really a question mark. Maybe we touched on that last week, but between the margins for the producer and the breakdown in the prices for some of the grains in the deferred, I would think that the fairing intentions, the breeding numbers would start to be coming up at this point. So I think that's what I'll be watching most closely, is how we're doing on breeding as we get into the end of the year. If we don't add much breeding inventory, then we're looking at a very tightly supplied market here all the way through the end of the year. Hogs could continue to support the beef market, especially, as you say, if those export markets stay strong.
Another thing I wanted to ask you as well before we run out of time, Mike, we've seen a wild ride in this cotton market the last couple of days. We moved sharply back to the upside today. I've heard some of the chatter out there about the copper market, entering a bear market and how that's an indicator of recession. You have Fed Chair Powell out there again today talking about recession woes and getting inflation under control and probably not having a soft landing for the economy. Looking at some of those outside factors and thinking about inflation, what are your thoughts with what's going on with the financials and outside markets here heading into July?
I think the trade after the June rate hike of 0.75% was wondering whether they do 0.5%, maybe back off a little bit, because some of the economic data is not that good. I mean, we got GDP figures and we are deep in the red at this point as far as negative growth. But I think then Powell and the ECB talked this week, and they're leading us to believe, along with some other Fed governors, that another 0.75% rate hike in July is coming. That almost assures us for a recession, because you're just stripping demand down right as you go into the fourth quarter, because all those rate hikes will hit us in that fourth quarter time period, Jesse. So that goes back to copper and wheat and hogs, all those elastic commodities, soybean oil, cotton, the fiber markets, the sugar markets, the coffee markets, wheat. Those are all going to be very sensitive, or historically very sensitive, to a weak emerging markets. That's why we can't pick up the investor buy yet. And that's why it really is up to the weather and this weekend for the grain markets to rally. And I'd say even to the lesser degree, the livestock markets, because if those equities markets unwind anymore, the wealth effect goes away. And I think the livestock side of the funds being long will walk away for a time as well.
Well, Mike, great stuff as always. Before we run out of time, any final thoughts you have for us heading into the holiday weekend?
Just wish everybody a blessed and happy 4th of July and Declaration of Independence sign. Think of those guys and how many pieces of paper they shredded before they got it right and got it worked up. And I love this picture by Mr. Hall. Just a great, I love the onlookers watching the signing of the Declaration of Independence.
Well, I'm glad you shared this with me. The picture showing it here on the video feed. And, of course, we always appreciate the time and analysis with that. Mike Zuzolo, Global Commodity Analytics. You can find him online, globalcomresearch.com. That's com with 2 M's, globalcomresearch.com. Mike, have a great holiday weekend, sir. We'll talk to you next week.
Thanks, Jesse. If you're in the area, stop in for a carnita on Saturday.
That sounds like a good idea to me. With that, Mike Zuzolo, Global Commodity Analytics, joining us today here on Market Talk. Let's go do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.